Did you know that the banks are required by law to loan you $50,000 to $250,000 worth of funding without any documents? Whoever told you that the banks were, they couldn't do that, or the fact that they was loaning you money, they were lying to you, okay? And essentially what I'm going to talk about today is how to be able to maximize no doc loans, help you understand the laws behind loaning and lending. I'll just go over a couple of USC laws. But more importantly, man, my goal is really to empower you guys to go to the bank and apply. All right. Now, if you're brand new, like, comment, and subscribe. All right. If you do that, that's going to help the algorithm. And yeah, man, let's get straight into it, man. So essentially, man, you don't need stacks of paperwork to walk into the bank. All right. A lot of us think that we need to have tax returns, we need to have revenue, we need to have this, that, and the third in order to get funding. But the reality is you don't need that. Okay. Because when you look at 12 USC 1431, which is the powers and duties of banks, man, I'll pull it up here. 12 USC 1431. All right. So this is under the Constitution. All right. 12 USC 1431, powers and duties of banks. Dig me? So it says powers and duties of banks. Each federal home loan bank shall have the power, subject to the rules and regulations prescribed by the director, to borrow and give securities, therefore, and pay interest thereon, to issue debentures, bonds, and other obligations, such terms and conditions as the director may approve, to all things necessary for carrying out the provisions of this chapter and all incidents thereto. Okay, so there's more information here. Okay, but what I'm going to focus on is essentially the main aspect of what they do, which is borrow and give securities. Okay, it doesn't say that they loan money. Okay, as a matter of fact, it says they give. All right, and also it says issues. Dig me? And it also talks about the obligations. All right, now if we go to 18 USC 8, feel me? It talks about the definition of obligations. All right, the term obligation or other security of the United States includes all bonds, certificates of indebtedness, national bank currency, Federal Reserve notes, Federal Reserve bank notes, coupons, United States notes, Treasury notes, gold certificates, silver certificates, fractional notes, certificates of deposits, bills, checks, drafts of money, drawn by or upon authorized officers of the United States. Okay. Now, who's the authorized officers? Us. You feel me? So I bring up this aspect so that you guys can understand that, you know, if the bank ever tells you that they are loaning money to you, they are lying. Because by law, their duty is to give. And you're probably trying to figure out, okay, well, what is security? Security means money. In the Constitution, when you're speaking in bank terms, security means money. If you want to further dive into more information about this, you can go to Modern Money Mechanics. Matter of fact, let me see if this is the PDF. Perfect. It's accessible to anybody, and it pretty much breaks down how money works. Okay, and I suggest anybody who wants to truly know the truth about money to look up Modern Money Mechanics. I may do a separate video on Modern Money Mechanics. Okay. Who creates money? Okay. The actual process of money creation. All right. And essentially, it even breaks down, talks about how it really started. Goldsmiths, as early bankers, they initially provided safekeeping services, making a profit from vault storage fees. You feel me? So you guys can take a look at this for yourself, but to make it make sense and kind of break down what the Federal Reserve or how banks make money is when you apply for anything. All right. The bank is going to borrow that money from the Federal Reserve and give it to you. All right. And essentially it says to pay interest thereon, to issue debentures, bonds, and other obligations, to essentially give money and issue money. That is their power and duty. All right. Now, why am I bringing this to the forefront? Okay. It is their legal obligation to make sure that they loan us money. Okay. So obviously you guys go and take a look at those laws for yourself. But I don't say that so that you can take this and scream to the banks, oh my gosh, you guys owe me this, or you guys must borrow and give. And yes, knowing that fact should build belief that as long as you apply, then they're going to actually give you the money. Okay. Now, obviously, it's not that easy. Okay. You could go about it in this way by applying and challenging on on whether or not they should be giving you the money, or you could just position yourself so that the banks would just give you money and you don't have to go through the rigmarole. So let me just talk about the no doc loans. Okay. No doc loans are funding options that don't require tax returns, that don't require revenue, income verification, and it's ideal for people who are self-employed, people who are small, who own a small business, entrepreneurs, right? And anyone who isn't a traditional borrower. Okay, and what is a traditional borrower? Just people who just go and apply for credit. Okay. Now, why do they offer these? Because they want to attract borrowers, and essentially because they are required by law to allocate these funds for lending. This is the only way that they can participate in commerce, is when we apply for things, you are able to help the banks make money. Okay. Because when you apply for things, they take the money from the Federal Reserve, and according to the modern money mechanics, and if you understand fractional banking, they multiply your number by 10 times. So the point of me bringing this up is you are to their benefit each and every time you apply. So go and apply. You feel me? Now, just to dive into 12 USC 1431 and kind of just help it make sense and help you kind of understand how this stuff applies. Number one, this law, okay, essentially mandates for banks to loan you money, to provide credit to the public, okay, because this promotes economic stability. But also at the same time, I want you to understand that banks are dependent upon us, okay? Another one I want to talk about is the fact that this essentially creates an obligation for banks to make funding accessible. They're not supposed to hide this information from you. They're not supposed to act like you cannot apply for things or you cannot get loans, this, that, and the third. And more importantly, it is super highlighted for business owners. It's super highlighted for small business owners and entrepreneurs, because obviously the big business are able to go out there and get funding and things of that nature. But small businesses thinks that they can't get it. Okay. Another law I want to talk about is 12 USC 347B. Advances to individual member banks are on time or demand notes, maturities, time notes secured by mortgage loans covered 1 to 4 family residents. Essentially, this law promotes you being able to liquidate that money. Okay. You guys can go and take a look at this law for yourself, but this promotes you being able to liquidate that money anytime you get funding, things in that nature. All right. Another law I want to highlight is under the Truth in Lending Act. Okay. The Truth in Lending Act, 15 USC 1601, talks about the informed use of credit. It talks about terms and personal property leases. Let's go back one. It talks about the definitions and rules of constructions. It's going to break down certain information, key information. I'll just only go here, and I'll only go here, and even down here to help you guys just make things make sense, okay? And this is what we use when it comes to debt, all right? First things first, man. The term organization means a corporation, government, or governmental subdivision, agency, trust, estate, partnership, cooperative, or association. So you just think of an organization as a business, as an entity, as an LLC. You dig me? And then we dive into the term person, all right? The term person means a natural person or an organization. You are a person. A consumer is a person, all right? The term credit means the right granted by a creditor to a debtor to defer payment of debt or to incur debt and defers payment. You dig me? And the term creditor only refers to a person who both regularly extends whether in connection with loans, sales of property, or otherwise consumer credit, which is payable by agreement in more than 4 installments, for which the payment of a finance charge is or may be required. The person to whom the debt is arising from the consumer credit transaction is initially payable on the face of evidence of indebtedness. If there is no such evidence of indebtedness by agreement, notwithstanding the preceding sentence, in this case of an open-ended credit plan involving a credit card, the card issuer, and any person who honors the credit card and offers a discount, which is a finance charge, are the creditors. Okay? So, I'll just break this down real quick. First of all, credit can only be granted by a creditor. Okay? And a creditor refers only to a person. All right? A person means a natural person or an organization. Now, when you see things like or, it means either or. Now, what is a natural person? A natural person is a living, breathing person. You dig me? And an organization is your straw man, is an entity, is a business, like it is said above. Okay? So you are extending credit to yourself. When you apply for things, you are just extending credit to yourself. The bank is not loaning you money. You are essentially putting in an application, giving them the fiduciary obligation to exchange your bond for money by the Federal Reserve. They exchange your bond for the money by the Federal Reserve. They use what is explained in the modern money mechanics as fractional banking to multiply that money so that they can be able to participate in commerce, loan money, and continue to give securities. Okay? And essentially, the Federal Reserve, because the Federal Reserve essentially requires them to extend credit so that the economy can stimulate. All right, so it's a whole cycle of money and credit being put in place, and you guys need to take advantage of it. And if you're not, I'm gonna help you. This is why most people don't know about this. Okay. Essentially, the system is designed for people who understand it, okay? So when I talk about these laws here, when I talk about the things above, when I talk about, the benefits of credit, when I talk about the use of these laws, you have to understand it, because it is not for people who don't understand it, who just hears about no-doc loans, and then they go to the bank and say, I want a no-doc loan. That's not how you apply. That is not how you get funding. You have to understand all the things behind it in order to fully take advantage of it. Okay? The reason why they don't advertise these laws, because they prefer traditional borrowers, people who don't know the law, people who just go and apply, and they're able to use their rigmarole to make them think that you can't get the funding. Okay? Another thing is people's lack of financial literacy. People don't understand the aspect of loaning. They don't understand how to get funding. They don't understand financial literacy in its totality. They don't even understand how to build a business. You feel me? So thinking that you can't get funding, okay, well, essentially, that's the reason why you can't get funding, because you're afraid to do it. Right now, if you have above a 700 credit score, you can actually walk into the bank and get funding. We're going to talk about that. Okay? So it is a myth thinking that you can't get funding if you know what I mean? I would just say there's a lot of myths behind like getting funding. But I'll tell you right now, all you need is good credit, LLC, or EIN, and you can truly maximize the funding. You fully establish a business, you can get funding. Okay, just because you're a small business doesn't mean you can't get funding. Just because you don't have any revenue doesn't mean you can't get funding. Because again, you are extending credit to yourself. The bank is not loaning you money. Dig me? Now, how to position yourself in order to get no-doc funding. Okay, number one, you want to ensure that your credit profile is clean. No derogatory marks, no negatives. Dig me? A lot of times, what we do is we want to try to get funding with bad credit. And it's possible, all right? But you're just making it harder. You dig me? It's better if you position yourself to get funding than than trying to just go the hard route, build up business credit, walk into the bank and try to argue your case. Just put yourself in position so they cannot say that you are not credit worthy. All right? So if you got inquiries on your credit reports, things like that, You want to get stuff like that off. Late, you want to get that stuff off. You got, negative items on your credit report. You want to get that stuff off. Okay, whether you're going to do it yourself, use AI technology, or whether you're going to tap in with somebody like me, join my financial literacy mentorship. You can DM me on Instagram if you want to learn more about that. But people are a part of my financial literacy mentorship. They get the mentorship on the financial literacy aspect, and I help them with the credit repair, and I help them build and establish their business. Okay? You want to make sure that you have a profile that makes you look like a low risk borrower. So you want to make sure if you have anything that can enhance it. Now, you don't need good revenue, but if you have good revenue, if you have good income, that will be able to help you. And also at the same time, knowing which banks are going to give you the funding. So we got things like Chase, all right, Truist, okay, Lightstream, BMO Harris, okay, Key Bank. If you're trying to go for EIN, you can check out Divvy, Ramp, but they are going to take a look at your revenue, okay? You must understand your rights, and if you understand your rights, then it's going to enhance you to borrow more, okay, or essentially extend credit to yourself more, okay? Now, this is why you want to act now, okay? Because of Donald Trump being in office, there's an influx of new laws and more of an enforcement for them to actually loan money to small businesses, okay? He's very business focused. Now, I'm not sitting here saying that everybody is going to be able to fully maximize on the business, aspect of what some of the things that he's going to tie into our economy, but be prepared because right now it's going to be an influx of new borrowers, an influx of new businesses. And if you take advantage right now, you can put yourself in a position to get over $250K in funding. If it wasn't easy then, it's even easier now, okay? Interest rates can go up and down. Access to the funding could change through the economic conditions, but the opportunities to invest may increase. The opportunities to build a business, or better yet, if you need help, you can actually take this to help consolidate debt. Okay, what is consolidating debt? It's taking, you can do things like balance transfers. You can do things like getting a loan and putting all your debt in one place so that you're only paying one bill, especially if you're going to go that route. Or if you're going to go the debt discharge route, obviously, then you can do it that way. But the debt discharge is only reserved for people who truly need it, and only reserved for people who truly know it, understand it, and believes it. It's not for people who don't believe it and, hope that some lotion and potion or some extravagant law that they can scream to the bureaus or scream to the banks and they'll just wipe out their debt. You have to, like I said, it only benefits the people that understand the law. If you don't understand the law, it's not going to work, okay? So essentially, I want you to leverage the banks. I want you to leverage the funding and no-doc loans so that you can be able to grow financially. So you can be closer to financial freedom, because if you get the funding, you can take the funding and actually invest in yourself, invest in your business, invest in your brand, the things that we talk about. We talk about creating a content creation business, creating a digital product. You can use these things to be able to invest in yourself. You can use these things to be able to, promote advertisement. You can use these things to open up an event space. You can use these things to start an Airbnb, furnish an Airbnb. You can use these things to start a restaurant. You can use these things to get your new food truck. You can use these things to get your a vehicle, right? You can use these things to help consolidate your debt so that you can actually fix your credit. You can use these things to be able to put yourself in a position so that you can grow financially. Do not do these things just to get liabilities. Do not do these things just to pay your debts and you don't even have a solution on how to pay back that debt. You dig me? Don't get business credit to pay your debt. As a matter of fact, you won't be able to get it. Even though we can talk about, you are extending credit to yourself, banks act as a fiduciary / trustee. All right, and if they take a look, they can inherently say, hey, look, man, I don't think you're ready for this. And obviously, if you don't know how to navigate around that, communicate, or challenge them on that, then you will succumb to whatever they say. So what I'm telling you to do is just focus on your credit, build your personal credit, or build your revenue in your business so that when you walk into the bank, you have some type of collateral, some type of credit worthiness, so that they will be more incentivized to loan you money. Okay, well, they already get money from applying, and I'm saying loan just for the heck of it, but so that they can issue you money, give you the securities. We don't want anything to keep us from not getting what is duly ours. So lastly, one thing that I kind of want to just point out, I just created a no-doc guide. Okay, in the no-doc guide, I'm going to be teaching you guys how to get funding in 90 days or less. Okay, and essentially, man, if you want to take advantage of that, it will be in a link down below. Dig me? Go ahead and grab the no-doc guide. It's going to teach you all the banking relationship. It's going to teach you all the jargon. It's going to teach you how to truly maximize no-doc loans. It's going to tell you everything you need to know, and also at the same time tell you about the different relationships and secret lenders. It's going to tell you a lot of things that's going to actually help you grow, and it's only $17. All right, it's only open for the next 100 people. Okay, and if you guys take action on it, you guys be able to get it for $17. All right, so the link will be down below. Thank you guys for tapping into this video. Once again, comment, let me know what else you would like to learn. Like the video. I love you guys, and I'll see you next time.